I'm sorry, guys. I got disconnected from the live there. OBS kind of went bonkers on me there. Not sure what happened. My internet seems fine, so it must have been something else. But yeah, so we were talking about Cass, I believe. I'm not sure where we disconnected, guys. Let me just get the new chat up. Sterling, you know why I disconnected? I don't know how long I was talking to myself for. I don't know if it was during the moment where you called. Just gotta click and drag this bad boy over here. There we go. Da 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 da. Shorts on Caspa. Okay, that's what we're talking about. That's brutal. All right, almost just getting the chat pulled up so I can see you guys a lot better. There we go. Sorry about that, guys. That's frustrating whenever that happens. Seems to happen to me at least twice a month where I get a disconnect from live there. But yeah, we were talking about someone had wanted help going through Caspa. Caspa, just go back to it. It was longs on Caspa we're talking about, not shorts. So we were talking about how you could, this was the moment where you would short at this value area high and this bearish change of character. There was an SFP opportunity when we swept this high as the front run to the bearish change of character. Yep, and then now we're at the point of control for anyone who's in an active short. This is where we'd be targeting for in general, because this is where a mass majority of the liquidity is. So here we're looking for a bullish change of character, break of momentum out of value area low, and then rotating back up to the value area high in hopes for a break of structure continuation. What's up, Overcome? How you doing, man? Now at inverse head and shoulders, this is kind of a wonky one because the right shoulder is dramatically more aged than the left shoulder, and usually the age is relatively similar. Their momentum is suggested by a trend-bound pull from the low to the high, and it gives you a measurable-based target where we expect price action to potentially go to if it were to break. Now, you definitely don't want to marry these targets because sometimes they're really aggressive, but they always seem to play out one way or another. An example of like a regular head and shoulders, if we look at Bitcoin's macro one that we just broke. Right, if we go to the daily, you can see that we have this massive head and shoulders here. And you expect that this would be a really aggressive target, right? Get your trend bound move for your neckline from the top to the bottom, right? There's our targeting frame based on momentum. And after the break, your technical target. Like we're already pretty much there. And it suggests a target of like around 54K. But yeah, you look at your opposing barriers when you have a target like that. What could stop this target from being hit, right? And that would be like this point of control, for example. And for CAS, in that scenario, it would be the supply in this previous value area low alongside with the confluence of this 50-day EMA. So if we do get that, if we do leave this value area, which I think we're very likely going to, or at least on the upside, then prepare for that move up. One thing that's always in the back of my mind, and I know this is kind of very conspiracy theory kind of stuff, but it's not so conspiracy theory anymore. The stuff that's going on with Epstein and like the type of people that are going to be held accountable, if they are held accountable for the stuff, those people hold the markets. So I'd recommend getting your conspiracy goggles on and keeping an eye out on the names that are in those files and seeing which ones that could dramatically impact the market if they get arrested for anything that they've done, like like Bill Gates and all that stuff. They can have a bit of a black swan event in the market if they start arresting those people. So just keep your eye out. That's one thing that just kind of in the back of my mind. I'm hoping that the market positioning is a lot more bullish than it is now when that starts happening, or if that starts happening. Just prepare for the worst, that's all I'm saying. Oops, I didn't mean to do that. Alright, everyone's starting to come back. What's up, guys? Yeah, sorry about the disconnect there. We're getting closer to that. The orb low. Definitely want to prepare for something like this. This is the low here where the orange line is. We're expecting the drop when we close below this, but the close itself was pretty aggressive. So this retracement is really helpful for anyone who wasn't able to get in based on that conditioning. Was really annoying. And taking the close above this high would give us that rotation of our 3-minute strong high, or strong low. Currently it's here, but a close above here would rotate to here. Good timing from Alex Discord live straight to here. Oh yeah, right on. Yeah, these days, yeah, you can always, it's nice being able to trade with, alongside with people that you can trust. Just whenever you want, just hop from one stream to another. Especially if they trade similar strategies to you, or look at similar key levels and see how they're going to respond. Kind of piggyback off of it. On the job installing cabinets with earbuds. It's hard to learn. Yeah, I would say that's kind of hard to learn in that environment. Trying to apply it while, unless you got like a notepad or something. When you're trying to apply the knowledge, it's good to, be right at your desk with the charts in front of you. The one thing I used to do when I was learning how to trade was, I was doing Uber. I just, well, the timeline's not exactly right. I was first working at a call center when I was learning how to trade, and I would try to learn in between breaks, but not be able to like apply it. But then when I felt like I figured it all out, I quit my job too soon, way too soon. But I quit my job thinking that I could live off trading at that time. And like the stress of it all in combination with the COVID crash, really, it wasn't great. So I lost like half my account. But then with Uber, when I did Uber, like just in between trips, I would learn while I was waiting for trips and stuff like that. And you can always put your shift on pause. And I was able to apply it a lot better, like what I learned. And I figured out what I was missing and all that stuff. Mostly it was risk management. and the strategy I was using was good, but it was a martingale strategy. So once you lose a lot, like a lot, with the martingale strategy. And I really wanted to shift into something that was more consistent. So I just went through. That's when I went through my back testing phase and back tested like every word spoken on YouTube, every structure, every chart. Just back tested, see what the probabilities were, and see if what's actually legit and what's not legit. All right, we're currently sweeping our local high on the 3-minute chart. Let's see if we get a close above this high, or if we're going to SFP. If we SFP this, then our target is here at this low, which is kind of a boring move. Can't really take action on that. Our buyer's momentum is bullish right now. So I'm hopefully see a close above here and start getting closer to that orb low, so we can use it as our form of confluence for a short. You can relate to that middle. I hear ya. Been following you since you first saw Max's mention of you. Incredible story. Well, thanks, man. The only thing I didn't like about that video was the representation of that strategy. It's a good strategy, but it's not really one that you can live off of unless you had a huge account already. The Boltzmann strategy. Very simple, mechanical-based strategy that anyone on the planet can learn. Even my son Jaden, who's like, while he was 8 years old, he had like an 80% win rate with that strategy. Like, yeah, he didn't really know the stop loss rules and stuff like that, but he understood like when A, B, C, and D happen, we go down, or when A, B, C, and D happen, we go up. And using that strategy, it's really simple. All right, looks like we got that. The SFP target already hit. So let's see if we bounce off this momentum. Or if we can get that change of character in 3 minute internal. But yeah, if you're thinking about quitting your job to be a trader, overcome. It's good to have, with trading especially, have a 6-month emergency fund. Like I'd recommend at least a 3-month if you're working like a 9 to 5. But with trading, you need to have a bigger one, a 6 month to a year, so you have something to fall back on. And paper trading, to make sure you have the win rate to support yourself. Finding out how many opportunities per month or per week your strategy gives you. And then using your expenses as a guide to telling you how big your account needs to be in order for you to be able to cover your expenses. Because you want to be covering your expenses 3-fold, 4-fold. You don't want to be covering it like one. You don't want to be living paycheck to paycheck as a trader. Your goal is to escape that, right? And use the time as you learn to build the account that you need. So I'd recommend making sure your account is able to support you like 3 or 4 times more than your expenses, so you can actually build savings, stay out of debt, all the good stuff, and like start investing in like a higher, longer term portfolio, and using your lower time frame trading to fuel that, right? So if I were to go back in time and change things, that's what I would have done. It would have made my whole process a lot less stressful of becoming a full-time trader. And if you guys want a checklist like that, I can build you a big checklist like that, like all the things you need to have happen in your trading career before making the switch to doing it full-time. Doing it too soon can really burn you. All right, we got that change character occurrence here. Well, this candle closes soon, about 1 minute and 20 seconds. So we might not even reach the orb. This is a suggestive move telling us that we could be coming down to this low. If you close below the momentum, close below this low, just after getting an SFP. What happened? Did you continue with? Oh yeah, so I did start this. I got disconnected. I'm not sure how. It wasn't my internet. It has something to do with OBS. But we did continue with Caspa. So I started this stream finishing the Caspa TA. But basically, it's about waiting for the long and holding an active short. Once this chart decides I want to load. So this is the 15-minute time frame for Caspa. Right, so when we reach this value area high, just a quick recap. We basically stacked liquidity from these lows, right? We didn't take it, we stacked it at these lows. So we have a ton of liquidity here at 0.030306. That's ridiculous numbers, I know. We started coming after it when we had this bearish change of character during this moment right here. When we broke this low, we had an SFP to front run it, right? So this was the front run move when we swept this high right here. This told us that we could be coming down to this low, right? And when we took that low, we had a bearish change of character. When we had that bearish change of character at a value area high, based on value area statistics, this tells us we're going to rotate from here to here. And right now we're at our main threat, which is the point of control, right? So if we lose, let's see, this is the volume shelf. So if we lose this low, we'll have that full rotation down right after to this value area low, where I would be preparing for a long, right? With the stupid amount of confluence based on liquidity sweeping these lows at the value area low, with a decent pace of downtrending momentum, we break that momentum, we can look for a long to the value area high in hopes that we break above it, use it as a form of support to tell us that we can hold our trade longer. But if we instead have the bearish opposing change of character like we did here, it's telling you to get out at least with 75% to 100% of your position and look for the potential rotation back down. I looked at in the last live before we got booted, the liquidation heat map, and it's not just based on looking at the order, like the market structure to understand the evidence of the order flow. It's the evidence is here too. So here we can see that we grab liquidity from the upside, the internal liquidity. We start stacking some more above us from that bearish change of character, and we're on our way down to grabbing the lower side liquidity. So a massive majority of it from the 2-week or 15-day range is right here. So definitely look for longs there. Think like a market maker, right? This is great positioning for a long. You can use the 15-minute time frame to dictate your entry, or depending on the posture, maybe the hourly time frame. So like here, for example, this hourly posture was great for longs. You enter here, stop loss here. It may have went against you a little bit, but you wouldn't have gotten knocked out. And eventually rotate to the value area high. Here, same thing, hourly structure, proper pullback, stop loss above the strong high. This is the confirming candle. The confirming candle is really aggressive. And then we're still have yet to rotate down to the value area low. But yeah, for Bitcoin, we might not be reaching that orb, guys, because we are losing momentum now. We had the SFP. The SFP suggested a target of this low. The low was broken, giving us a change of character, and now we're likely coming back down to take that low. And this, if we zoom out a little bit, we can see the confluence of us getting acceptance into this valley area again right here. So we're basically using the valley area high as a form of resistance, front running the test of this low and front running the orb. And I know a lot of people are begging for that confluence for a short, and I understand that, but I don't think we'll get it. I don't think we'll reach it. The power of valley areas. I do gotta head out soon because I've got to go on skating with the kids. And then at 4 we got our masterclass call. And and I like the idea of going over a book map. It'll be fun. It's a really easy tool though. How's Sneck doing these days? I've heard quite a big bag and bought one was crazy low. Diamond hodl was the plan and sell at the Bitcoin all-time high of a bull run. Yeah, in terms of the alts are getting slaughtered. But yeah, with Sneck, if I were a Sneck holder, I would think the same thoughts. I'd be looking for Bitcoin being overheated in a Newpol chart in confluence with a daily bearish change of character, and then get the heck out of all my alts during that phase. But we kind of have a front run to that on the Newpol chart. So this is Sneck. We wanted a break of these key levels here in order for us to get a potential return back to this valley area, but we never broke them, unfortunately, which sucks. When Bitcoin lost, this is January, eh? Yeah, when Bitcoin lost its valley area, Sneck kind of fell down along with it. And this is the BitGet chart, so this is the origin of its price action on BitGet, but I believe there's more history than this. But if this is the full history, then we've created new all-time lows. Right now we got this awkward daily structure, really volatile. What's this candle? It's 70% candle. Man, that's gross. All right, we got to look at structure here. So we swept this high. We didn't take the low after. It's yucky. This is still our key level then. This is an inside bar. So this would provide us an SFP. Alternate to here. Quick level low. So we need a candle body close above this momentum. Let's go to the lower time frames. This is the 6 hour. Man, this is messy. Well, this is a 20% range. And because it's such low in terms of liquidity. So low in terms of liquidity that our candles are moving pretty quick. This market cap must be really high against its liquidity in order for this to make sense in its percentage bound moves. So break momentum here, momentum here. And now we're testing the uptrending momentum at a point of control. Kind of giving us that head and shoulders kind of vibes. Fair value gaps galore down here. So yeah, if you get a candle body close below here, could we come back down? We might test this high, get a bit of a bounce, hit the point of control and come back down. But yeah, I expect a rotation back to this value area low. I'll be mindful of these wick level lows. But this is where I expect for us to find support again. At this value area low. This value area is how old? This value area is 18 days. So at 0.00512. So yeah, between that and 0.00525, I prepare for longs on this. And I recommend a spot environment because of the if you look at price action behavior and see these whipsaw wicks all over the place, and trading this with futures will be really unsafe. The reason isn't just being because of how it impacts the structure, but also because of how your stop loss may or may not be honored, right? So if you have an event like, let's say you jump in on a short or something too soon, you didn't wait for like a bearish change of character or an SFP or whatever your criteria is for an entry, and you have your stop loss here, your stop loss might not be honored there. It might be honored way up here, right? And if you're trying to stay true to your budget in trading, you want to make sure that you're trading an asset that won't have such bad slippage that it will dishonor your stop loss and then have it close at a much higher or lower level because of the slippage. So yeah, I would recommend if you're going to be trading this to do it in a spot environment. Right, testing momentum. At that 3-minute bearish change character. We'll probably get we're likely to get our head hit here and continue down. But if we do run up here, then we have that opportunity with high confluence for shorts. This is kind of a low confluence short zone. Thank you. I just checked his name from his profile. I do accept DMs, but I will never be the first one to message you because of impersonators. I have a lot of impersonators. So no Valentine's Day video. Yeah. I was thinking about making a video about rows, but no. The theme, I keep getting told not to do them. That's my advice I keep getting. I'm like, well, I like doing them. They're kind of fun. It feels awkward sometimes doing voices like the Batman voices or the Grinch. That was awkward for sure. But yeah, I was gonna do once a year. I do analysis on rows because it on Valentine's Day creates a top signal every time. Let's see if we had it again this time. This is the daily time frame. So like if you look at the past, this is the Rose's chart. We had an aggressive sell-off, right? People buy Rose to then airdrop it to their friends or their family as like a gag gift in the crypto space. And then we end up getting a correction after the people sell it after receiving it. So the transfer rate goes up higher, like how many transfers happen in a day go up higher leading into like the beginning of February. And then they kind of like drop after February 14th and people sell what they received. It's kind of funny. But we actually lost a really critical demand zone the last February 14th, right? So trading this thing is a little bit, became higher and higher risk as we got further and further away from that demand zone. And if we look at the 14th, this time around, yeah, it peaked at the 14th and now we're coming down again. But not as like aggressive as the previous time when Rose had a lot more holders, right? It's interesting. It's funny, but I'll save this chart. I thought I already did. Okay. Oh man. Did I just see I had 59,000 notifications on TradingView? Or is that a glitch? That must have been a glitch. This is 12 now. Okay. Hey, if possible, would you check Helium? Ticker is XPD. Yeah, let's do that. XPD. Why does that sound familiar? Who's asking that? Pereira. Is it a... There it is right there. Capital.com. Probably a Wanda commodity. Oil, probably. Sounds familiar. I must have done TA on it. We'll find out if we look at this chart. If I have any drawings. Guess not. Look at that. It's doing good. For the weekly. So it lost momentum from 2008. Used it as resistance. Here, got the lower low. Coming back up. We mitigated that as this was a form of supply. Like this was supply, this was supply, supply. This was the supply that held it down to induce a range, right? Got the rounded bottom. That's great. I kind of got that Wyckoff accumulation vibes. We broke, right? Induce a pullback after grabbing liquidity from these highs. But then we got that break of structure right here during that moment. telling us that we're going to have a strong trend after we got that break. So we got that change of character reaction when we closed above this high. And now we're kind of approaching this previous value area here, which is really, really important. So how we perform here is going to define the rest of this next, like how well this this trend is going to perform. So if we grab our horizontal ray, click and drag to that value area low, we need to see acceptance into this value area, and right now it's failing to give us that. So we get a previous value area low, we get our previous point of control, we have a good valley right here. I'll explain what that'll do for you later. All right, previous POC, our previous value high. Okay, so what you want to see for our strong value areas, demand zone below, we have one here and we have a strong one right here, right? This is what held us up for this range. And then ultimately, it's not very much of a coincidence for this stuff to happen, but we've seen it act as a form of supply leading back up into it, which induced a pullback originally, but we melted right through it eventually and are kind of using it as a form of support. So we're kind of at this make it or break it moment for this asset when it's trying to get acceptance into this value area and it keeps failing to do so. This is a weekly time frame, so it's like really macro view of this all. And we start diving into lower time frames afterwards. So we have the pace of the buyers sped up once we got that break of this key level. We had that break of structure. So we have evolving momentum here, and we have more broad momentum here. Right? And what we want to see have happen to extend our target is a break of structure leading into the value area for us to get that potential rotation up to the value area high while being very mindful of the point of control. And based on the volume profile behavior, price action is going to move relatively quickly once we get past this volume shelf, which is acting as the primary form of resistance that's preventing us from getting that acceptance into the value area. So a close above that, acceptance within that, it would give us a fast-paced rotation to the point of control, right? Where we'd expect some turbulence, because we have a wick level there that could sweep and bring us back down. But at that point, we've already claimed the value area again, and we expect price action to go range bound there once again. The last time we were there, we were ranging for 1,106 days. So this is a significant level that we need to reclaim again. Now, it's a good time to rotate to lower time frames. Now that we're done looking at this on the weekly. We don't have a proper pullback here on the weekly, which is a little annoying. We don't have a proper pullback here either. We need 2 consecutive red candles for us to define a proper pullback on the weekly. So our key level for the weekly time frame is way the heck down here, which sucks when you're trying to use higher macro time frame structure to define a drop, right? So you're going to have to depend on a lower time frame like the daily and see what kind of structure we have here. We do have a proper pullback here though, which is nice. So when we had this pullback, we had 3 consecutive candles giving us a pullback. We did it with this wick level low, right? So if we close below this, we would have a bearish change of character. We did not close above this wick level, but we did SFP it, right? This SFP gave us a target of that low, right? But again, I say this all the time. I always look for the most recent pullback, even if it's internal, as a good safe target, and we hit that properly, right? So you would enter on this red candle, stop loss here. You would have almost got knocked out during that moment, but eventually we broke the internal low and then came down and had that target hit. But this is still the eye is on target here. It kind of is trying to hold momentum, getting above the 50-day EMA right now. We don't have proper acceptance into the valley area on the daily either. I think the daily is all you'll need though. We had the pullback, but we didn't take the higher high, which what gives you need to have a break structure leading into a value area for you to have proper acceptance, or a change character leading into it from here like this. It's a lot more dependable. So we get a 4 hour. Kind of look at bear flaggy, of course. Stacking liquidity on both directions actually. Getting squeezed like this, a pennant. So we have liquidity stacking here, 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 here. I don't have a tool that allows me to look at the liquidity for Palladium, but I recommend looking at that and see which one has the most weighted side of liquidity, and that can give you a good bias in terms of direction. But yeah, what we don't want to see have happen, man, is a close below here on the daily with the confluence of losing the 200-day EMA, or else we can start a trend back down. If we start a trend back down, you're going to be looking for demand zones, order blocks to help define a form of support. And right now, this is our kind of like our demand right here. That could induce a range. If that's fully mitigated, then we'll be likely coming down to that weak low. But we're at that make it or break it moment. You just really need to see us have that break structure leading to that value area so you can extend your target to at least 2,350 kind of area here. Close below here. If you're holding this, I would consider taking some off the table if I saw a daily close below here and the 200-day EMA and confluence together. This will, by the time we get down there, this could become flush with that key level. And that key level is up, $1,499.33. I hope that helps you out. But it's definitely a big moment. Congratulations if you're a holder of that. All right, here we go. We're coming up to tap this previous low. The orb is here. VWAP is barely moved. Seeing your entire thought process when analyzing a new chart is sick. Oh, cool. Appreciate the compliment there. Do you use USDT dominance? Oh, yeah. Bitcoin dominance, USD dominance, in total 3, and others dominance are ones I look at. I have them up here. I have like a dominance list here. They're great in confluence as watching the DXY. So USD dominance, for those of you who don't know, is a chart that allows you to understand how much of the total crypto market cap is being placed within this asset in terms of percentage. So right now it is suggesting 7.941% of the market cap, the total crypto market cap, is within this. And that's mostly assets that are tracked. So some of them are not tracked. In the decentralized space, there's some assets that would not be included in this percentage pool, but it's a massive majority of what's going on in the crypto land. So when you see strength in USD dominance, let's say, for example, like a bullish change of character, a break of momentum, it is good confluence to tell you that Bitcoin could be going down because funds or other assets too are flowing into USD dominance. So if this goes up, it's inversely correlated with the rest of the crypto space where things will likely start to go down. So if you see us, for example, you can use value areas in this, but you cannot assume liquidity on this chart, of course. But it does give you a gauge and understanding what the positioning of other assets might be like for their liquidity, which can get a little confusing, but really it's just about understanding the market structure story and the value area story of the USD dominance chart to help give you a gauge on when to prepare for assets to reverse or do a contrarian move, right? From going up back to down or going down back to up. So here would be like a zone of interest. We prepare for assets to start to go down again, because this is where the market cap of USD dominance is likely to go back up. Right? So same kind of thing with regular assets. You look for demand, impulse move up, basic structure, impulse move up. We have a low demand zone here, but this has been fully mitigated. You could pull a fixed range volume profile from here to here. You would include this in your poll if we mitigated it, but we have not. We just tapped into it. So just a partial mitigation. So right now it's suggesting that if you're preparing for longs and you want to have this chart in confluence with whatever long you're preparing for, you would want USD dominance's positioning to be above the valley area or at the valley area high, right? So up here, we prepare for potential longs on Bitcoin. Even though this is pointing down, preparing for us to go down, yeah. I hope that makes sense. It does flip your brain upside down when you're learning about these charts. But if you combined USD dominance chart with total 3 or Bitcoin dominance or others dominance, when you see a bearish change of character occur on this chart, you can find out where those funds are flowing to by looking at others dominance and seeing how strong it is, or looking at Bitcoin dominance and see how strong it is. If you see that Bitcoin dominance isn't growing as quickly as this is dropping, then that could be a telling you that the funds might be going into alts during that time. So it's really, so USD dominance is, think of it like a really good indicator and when to prepare for potential longs or shorts. But everything's upside down, inversely correlated. There's actually a great indicator called Shi High. And Shi High, what it does is it gauges the relative strength of USD dominance and looks as for opposing confluences in form of divergence, and then it will put an indication on your Bitcoin chart telling you that there could be an inverse correlative move occurring to help give you confluence for your longs or your shorts. So I'm explaining it is more complicated than seeing it. It is a paid indicator though, but you're not just getting that indicator alongside it, you're getting a bunch of stuff. So going to Shi High, if I go to, is it invite only? Yeah. Let me scroll down. Shi High from 11x. And we're looking for diamonds that'll appear on the chart once it loads. There we go. So this would tell you that there's an inverse correlation on the USD dominance chart, suggesting that funds could be flowing out of USDT and into other assets. It doesn't specifically tell you that it's going into Bitcoin, but it does tell you that there's funds flowing out of USDT and that it could help you with any confluence of your own setups, like testing this previous low. We don't have momentum drawn yet during that moment, but it also tells you the Monday high, previous day highs, previous week high, stuff like that, which is great for like ICT traders. But yeah, green diamonds, bullish, inverse correlation, red diamonds, bearish, inverse correlation. And if you see the golden ones, they're supposed to have a higher weighted impact. I like using them in confluence with valley areas, but most of the time, you won't really normally see me using it. But when I back tested it, this thing's honestly pretty great, especially in confluence with valley area data. Like at valley area highs, those diamonds are a lot more impactful. At valley area lows, those diamonds are a lot more impactful for confluence for setups. All right, let's get rid of that noise. It is a paid indicator though, but you don't need to pay for an indicator that you can get the information from yourself, right? You can go to USD dominance, right? You don't need to buy a bunch of indicators, guys, to make money in this space. Like the fixed range volume profile, I believe is free. You might need the essentials plan. Oh yeah, it's free. It's just a VRVP for some reason costs money. So you can do a lot for free as long as you. The main thing that indicators should do is just make your life easier, right? And 11 axis indicators definitely do make your life easier if you're trying to like speed through your TA every morning. Chicago is a different story. New York is closed though. Yeah. Yeah, there's bonds are closed today for sure, I believe. All right, guys, I gotta go. We're going. Yeah, the family and I are going skating for about an hour and a half, and then we're gonna come back and I'm gonna do a masterclass call with the community. But yeah, just a quick recap. Kind of in short mode right now. We're coming up to test this free valley area. Well, this previous low after losing this valley area. We got acceptance back inside here, or we're trying to get acceptance back in here. All we need is that break of structure, and that would lead us to the conclusion that we'd likely get a rotation to the valley area low while being mindful of this point of control. Kind of got to bounce off that volume shelf, right? If you want a lot of confluence, you need to see us get all the way up here, right? Maybe testing that VWAP, using the orb as a form of resistance, but this honestly could be enough to help drive us down. I'm not trading any shorts today, but I am preparing for the longs for tomorrow. Just the volume is too dreadful. So if we get a reversal structure here, or even better here with a golden pocket confluence at 64,500, this is where I'm preparing for longs, and you'll very likely see a signal from me in the Discord that I'm jumping in, and where I'll be preparing for my exit plan based on the current structure that's formed during this drop. But yeah, guys, trade safe if you're trading today. The volume might be a little bit awkward. We got holidays in the US, we got holidays in Canada. So and the US drives a lot of the market conditions. So trade safe. Have yourself an amazing day. Thanks for jumping on. I'll see you guys tomorrow. Tomorrow's live is at 10:30 a.m. as usual. If you're a part of the community, I'll see you guys in the trade hunting call at 9:15 a.m. And tonight at 4 p.m. for our trading masterclass call, we'll be talking about book maps. It's a pretty interesting tool for helping you understand where a large amount of limit orders are. All right, cool guys. You have a great day, and I'll see you in the next one. Bye.